Good morning, traders. This is a live trade recap as well as an update about the Webull desktop platform. If you were watching my videos last week, you know that there were some chart glitches that we were experiencing, and there is a new update for the desktop platform. If you check over here, 5.0.8 is the most current version. So if you haven't downloaded that, make sure you do so because it does seem to be working better. I have still seen a couple of weird things, but I'll show you what I mean by, that it's working better than it was last week. So if we look at the most active traded stock, TRCH, is trading with 224 million shares. So there's a ton of activity in that stock. If I pull that up on my single chart and then check it on the 1 minute time frame, there's TRCH. Then we can see if the chart is forming the candles properly. You can still see there is a lot of volume in there even right now. There's 2 million shares there at 12.12. Right now it's 12.23. So this is still being traded very actively. Now the thing to look out for the glitches is when a new 1 minute candle starts to form, look over here. When we see 00, we should see the new candle start to form immediately. The new 1 minute, and there it goes. So we saw the new 1 minute candle form. And then the other thing to watch out for is that the previous candle doesn't change its shape and that the wick doesn't appear or disappear and then reappear. Those were the things that we were noticing last week. And really it's been kind of an ongoing problem with Webull off and on. I wouldn't say it happens all the time or even every day, but it seemed to happen at least a few times a month, and whenever it does happen, it's pretty annoying and it makes trading very difficult if you're using the 1 minute time frame to enter and exit your trades, especially if you're using candlesticks. So let's watch one more candle start to form, and we'll check and make sure that this candle maintains its shape once the new candle starts to form. And we could say, at least as of right now, that the candlesticks are forming properly if that happens. So let's take a look here. We got 5 seconds left for the new 1 minute candle to begin to form. There it is. And then watch this one. Make sure it stays the same shape. And it looks like it's going to. We'll give it like 15 seconds here. So as of right now, it looks like the candlesticks are forming properly. Definitely much better than they were last week. So let me know if you are experiencing the same thing or if you've noticed some glitches. There is still a few things strange happening that I noticed, and I'm really scrutinizing these charts now to the point where I might just be finding, the tolerances of any chart. I don't know. So I don't want to say that that the charts aren't working as they should yet. So let's take a look at the trades that I took today. I'll also show you my screener that I'm using right now. I made a video about it last week. Let's take a look at the mid-cap screener. That's all I'm trading right now because the market is extremely unstable, and the we're kind of trading around all-time highs. We're in a little bit of a pullback right now, but it's not a big pullback. Therefore, we're not in a big recovery, and the small caps are just too risky right now. So this is my mid-cap screener. This is the screener criteria, the filters that I have set. Then I organize it by volume, and I look at the #1 traded stocks, or actually what I should say is not the #1 traded stocks, but stocks that are trading with 1 million shares of volume or more. And at 9:30 a.m., it takes a while for these mid-cap stocks to reach that level. Once they do, they go on my chart page, and I start watching. Well, I check the daily chart first. I'll show you in my day trading plan. This is my screener criteria right here. I check the daily chart, make sure they're trading above the 200 MA. This is after I've confirmed that they're trading with 1 million shares or more and that they're below $100. So if they're trading above the 200 MA, then they go on my chart page, and I check the previous high from the aftermarket, pre-market, and the previous day. And if they are trading above that level, then I can look for an entry. So let's take a look at what was on my chart page. So we have HLX, CLOV, RAVN, and this was something else that didn't meet the daily criteria, so I put the SPY in its place because you can't just delete a chart once it's here without reducing the number of charts. So anyway, and then you can see my SPXL order for my next swing trade. I'll make a separate video about that. So this was a really slow day in the mid-cap market. There wasn't a lot of movement. Definitely not many stocks. Well, only one stock was trading above its previous high. That was RAVN. It was a weird stock. I wasn't really too excited about taking a trade on it, but I ended up doing that anyway because it did meet my current plan criteria, so it wasn't like I was breaking a rule to take a trade, but I'll show you why I wasn't too hopeful that the trade would work out, but I took it anyway because it was extremely low risk. But let's take a look at that chart, the RAVN chart, and then I'll show you what I mean by I wasn't that hopeful that the trade was going to work out. So here's RAVN. Let's look at it. Let's take a look at the 30-minute time frame with extended hours, and you can see what happened. So yesterday it was trading around this $38 level, and then even in the aftermarket it stayed there, and then all of a sudden, in the pre-market around 4:30 a.m. I believe it was. Let's go to the 5-minute time frame. You can see, yeah, 4:35. It popped up all the way from the after hours level of 38.65 popped up to 56.68. So usually when that happens, I mean, I would almost venture to say every single time I've taken a trade, when that happens, the trade doesn't work out. So I should probably add something to my plan that whenever I see one of these giant gaps from, that happens between one session to the other, that I shouldn't take a trade. Now, don't get confused if you're not looking at the after hours and you see a big gap from the previous day to today, that could be okay as long as you check the extended hours and you see kind of a smoothish transition up to that gap. That's a good thing. But whenever you are looking at the extended hours and you see this giant gap, then generally that's not a really good setup, even if other criteria are met. So I wasn't that hopeful with this trade, and I'll show you what happened with it. But I took it anyway because the risk was extremely low. I'll show you the risk right now. It was 0.12% and 0.07% is what the other one ended up being. So extremely low risk. My normal risk is like 4 or 5% with the small caps, and then maybe with these mid caps, it's around 1% or 2%. So this was like a tenth of my normal risk. So that's kind of why I took it. There was nothing else going on, so I figure, what the heck. But probably shouldn't do that. I'm going to have to update my plan to keep me out of trades like that, because even though they're extremely low risk and they won't make a difference in your P&L in the long run, it screws up the win rate data, and that's really what I'm looking at right now with these test trades. I'm only trading one share, so I'm not really concerned with P&L one way or the other. I'm just trying to prove the win rate of this strategy, and it only needs to be a 33% win rate to be break even. So anything better than that shows that the strategy will work no matter what your position size is. So this is the RAVN trade. Sorry, let me go back to the entry on that. So we could see that it's trading above the previous high, and this was the very first entry that it gave when this candle broke above the high of this one. So that was my entry. And I'll show you the entry kind of live in the video. So I actually missed it myself, not Webull, but I missed it when it kind of first broke out above it, but then the price came right back to that 57.84 level. You'll see me trigger my hotkeys. You should see a little flash. There's the flash, and there I'm in the trade. So it happens that fast. The fills are very quick, and it really doesn't matter if it's one share or 100 shares. If it's a high volume stock, you should get filled quickly. So the whether or not you get a full fill or not, really it depends more on the available shares that are being traded at that price, not so much the platform. All right, so I'm in the trade. I've got my stop loss set. I'm using the 2-hour calculator, which you can download from the Facebook trading group by the same name, Trading Armor, and that gives me my profit target, which is always 2 times my risk. So that way, one winner will cancel out 2 losers with this 2-hour trading strategy. So let's see what happens. I'm going to fast forward a little bit because this was a pretty slow trade. I was checking on some other stuff in the meantime. So you can see at one point it looked pretty good, like we might win this trade. But then it kind of hit resistance there at the 57.90 level. Best thing to do is just stick to your plan. Don't get scared. A lot of times this kind of a thing happens. It comes back down toward or below your entry and then still comes back up and hits your target. So the best thing to do is always just stick to the plan. Don't get scared. Don't back out. Don't exit early. I did that for many, many months at the beginning of my trading career, and I always ended up red in the long run. So it's better just to stick to your plan, and then you can figure out if what you're doing really works or not, based on your risk management. So here is where we're coming down and getting stopped out. This is one of the weird things that I was talking about, where, I don't want to say that the charts are perfect, even though they're working much better than before. I got filled at 57.77, and the chart shows a low of 57.78 based on the candles. So that's what I'm talking about. There's still a few weird things, but I just want to give this a few days and see what happens before I start contacting Webull again, because it looks like they have made a major improvement on the way the candlesticks are forming. So let's see. This is the next trade. So my plan says that as soon as a 1 minute candle makes a new high again, just trying to go back to the beginning of that entry, that I must get back in to the trade. So here we go. As long as the ABCD pattern hasn't failed, and it hasn't, so this candle's about to break out through the high of the previous one. And that's 57.83. So you see me trigger my hotkeys, and then I get in, I get filled immediately. Again, very fast execution, because obviously one share is available on this stock. And again, if you're trading with more shares, it's more about the availability of shares. How many sellers are selling at your price range? That's what really determines whether you get a good fill or not, more so than the platform, or even if you have direct access or things like that. It's really about the liquidity of the stock. All right, so here I am again adjusting my profit target and stop loss. Now, originally I did kind of like a consolidation stop loss on this, which didn't really make a lot of sense. I made it the low of this candle, and then later on I moved the stop loss up to the low of the previous candle to what I entered on, which is my normal thing. And that just kind of got me out of the trade a little bit quicker, which was fine, because as I said, everything was moving slow. Here I was checking some stuff on the TOS charts, because SPXL, my swing trade, that first candle looked really weird, and it did on TOS as well. So it wasn't just a Webull thing. Something was going on at the open with SPXL, with the market data, not just the the platform itself. Basically, I'll just talk about that for a real quick second, because here you can see the SPY at the open. It didn't have this huge wick up here, but SPXL did, and SPXL is supposed to track the SPY, and obviously it didn't on the first 1 minute candle. But that could be because of the way this product works. It's a derivative of the SPY or of the S&P 500, so they do some weird stuff in the background. Whoever owns SPXL, the Direxon, I guess, company, to come up with these numbers. So I don't know all the ins and outs of that, but that kind of explains why this looks so weird on Webull, on TOS, and Yahoo Finance, and any other chart you look at. So back to the RAVN trade. That quick aside, that's why don't just go jumping on the broker right away when you see something strange. There may be some other explanation for it. So this is also, I'll show you this in my video about the swing trade. That's my swing trade spreadsheet. And so once again, our RAVN is starting to look like it's going to work out. I, again, adjusted my stop loss up to the appropriate level. That moved my target down to 57.91. That's still a 2R all or nothing trade. And my profit target almost got hit. It was shy by 1 cent, which is annoying, but that kind of thing is going to happen sometimes. It happens way less often than your target actually getting hit. But you can't change your trade once you're in it just because you see something like that. You just have to let the trade play out, and if it hits your stop loss, it hits your stop loss. So on that trade, I ended up getting stopped out by 1 cent, which is annoying, but again, it's going to happen. So, all right, so that's that for those trades, and then I'll show you my spreadsheet for this mid-cap strategy, which is right here. So these are the trades that I took on Thursday. FUBU, SPSE, FUBU again, and TIGR. So I have a video showing you those trades, but I didn't show you the spreadsheet on those trades. So we were green that day with a 50% win rate. Today I only took 2 trades. Again, they're kind of weird because that RAVN chart did not look that good overall. There was nothing in my plan to keep me from trading it, and it met all the criteria in my plan, so I traded it anyway. But came away with a 0% win rate because it's just the 2 trades and they both failed. So that brings obviously the average of those 2 numbers is 25%, but the average, we're only 6 trades into this. We got a long way to go to get to 100 trades, but right now we're exactly at break even on the trades. If I exclude that TIGR trade, which was an error trade, if you watch my live trade video from last week, you'll see why that TIGR trade was a trade that I should not have taken, and I didn't realize till after the fact. So without errors, it's at 40%, and the average of all of those percent is 36.67. So basically, I mean, right now we can't draw any conclusions. We're only 6 trades into this, with 100 trades really in total is what's needed to test this thing. But so far, I really like this plan and this strategy because the mid caps are much more reliable in general than the small caps, and that's what we're trying to prove here with this test trading. And the losses are so low money-wise that it doesn't really hurt at all to test this thing for 100 trades. You can see that right now we're actually still making a tiny bit of money here, even though we're not trying to make any money. We're up 25 cents with these 6 test trades. So it just goes to show you that this test is very cheap to run, even with real money, and it's better than doing this with paper trading because you're getting the feel of actual live trading with real money, even though it's just one share. So that's why we're doing this, and that's pretty much it for this video. Let me know if you have any questions about this trade or any others, or about Webull or the charts or anything like that, and I'll try to get back to you in the comment section. As always, no matter what you're doing, whether you're test trading, trading full position size, always go into every single trade with a plan. Stick to your plan no matter what, and then honor your stop loss, honor your profit target, and in the long run, you should be green. Take care.